Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May 1st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, well, it's Labor Day over there, so they have a banking holiday. It's actually, I believe, a two-day banking holiday, this being the second day of that holiday. So volume's going to be quite light again today. But anyway, they did get a little bit of economic data over in Great Britain. We got manufacturing PMI, which is Purchasing Managers Index, came in at 53.9, expected to be 54.8, slightly lower than expected there. And then the net lending to individuals month over month came in at 4.2 billion, expected to be 4.9 billion, so less than expected there. And then over here in the United States, we got ISM Manufacturing, which is our Institute for Supply Management Purchasing Managers Index. Now remember, this is like the equivalent of the flash overseas. We get flash here, but it isn't nearly as important as our ISM is. And it came in at 57.3, expected to be 58.4. Now remember, anything above 50 is expansion in the economy, but we're starting to see these numbers wane a little bit. We were getting up into the 60s, starting to pull back a little bit, and being lower than what was expected. Construction spending here in the United States came in at a negative 1.7%, expected to be 0.5%. Much lower than expected there. They did revise last month's number up from negative 0.1% to a positive 1%. So revision there, but not making up for the loss we saw in the headline number today. And then ISM Manufacturing Prices Paid came in at 79.3, supposed to be 78.3. So higher than expected on prices, which is kind of what we're looking for on prices going up. But one thing we're not seeing, remember, we're not seeing that wage inflation yesterday. We didn't see that come up. That is going to be difficult when you start getting higher prices for products, but your wages aren't increasing to cover those costs. It actually starts hurting. So we're starting to see some of that. And then total vehicle sales coming in all day today. One thing we are starting to notice, like Ford, GM, really starting to see pullbacks in their car sales. I think it was either Ford or GM had a 5% decrease in car sales versus SUVs, an increase of 1%. So a lot of these U.S. manufacturers and manufacturers abroad starting to see a real shift away from cars into SUVs, which we've been seeing for quite some time, but now it's really starting to get serious with car sales for sure. All right, on to the overall markets. We've got crude oil coming off today. Just about everybody is not happy today because most markets are in negative territory. Crude oil down just slightly, but trending. You know, we could put a trend line almost right across there, straight sideways. That would be a perfect place for a iron condor, it looks like right now. And then on to gold futures, coming off by over $13, just really losing steam once we got below yesterday and the day before's lows. Today, that market just accelerated to test the 200 simple moving average. So down just below that, just by the skin of our teeth for the most part, trying to stay above that, at least for the bulls. I don't know that that's going to happen, really, especially if we're starting to see a pullback in spending and things like that. I think that we might see crude oil start losing a little bit of that $60 handle anyway. Bitcoin looking a little bit more bearish, kind of rolling over. We've got the 9-day crossing over the 50-day, which is slightly bullish right here. You know, you get that crossover. That is a short-term bullish move, but we settle much below that 50-day moving average. It's not going to look very pretty, and I think that that's when we're going to go down there and test that 58.80 I've been talking about for so long. Has not happened yet. It's going to be when everybody thinks it isn't happening, I guess. Bonds just slightly down on the day. Yesterday, sell-off really kind of made that, at the end of the day, look a little bit toppy. We did settle above the 9-day moving average as well, which is a short-term bullish, just like in the rest of the markets that we've been looking at. It really wants to stay above that 9-day moving average today, but we settle below that, it's going to look pretty bearish. Then on to the VIX. VIX is moving higher. It's the only thing really higher on the day, as we'll look at the Dow Jones Industrial Average. It's off a couple hundred points, 250 points. Doesn't look like much of a blip today, but again, markets look like they are rolling over. Maybe there's a little support right in here, which we found before, but looks like it really wants to come down and test that 50 Fibonacci level for sure. Then the NASDAQ, a little bit of a pause today, just in negative territory, but trying to claw its way back into positive territory. A couple of the markets were in positive territory after the open, but started to see some slide after the economic data point, especially that ISM number that we were talking about, Institute for Supply Managers, Purchasing Managers Index, mouthful there, but trying to claw its way back right now with E-mini, or at least the NASDAQ. E-mini S&P is not showing so much strength here, but again, just the same thing. It looks like we're starting to roll over a little bit. Might find a little support on the 200-day moving average, which is what the bulls are hoping for, at least going forward. I don't have a whole lot on, so it's not really affecting me too much today. But you can see overnight inventory, maybe a short cover rally going on, and then into today with the economic data point. We started out selling off, and then economic data point was released and exacerbated that move to the downside. All right, on to the things that I've done. CMI, Cummins, I talked about this yesterday. You know, they're a big supplier of the engines to Caterpillar, Deere, even some of the automobile manufacturers. But with all of that being said, I thought that there was going to be a bit of a pullback with forward guidance, everything else coming out of Caterpillar and all the others. Played this to the downside, went in there and sold the May. I only did this in my margin account, couldn't really get anything off in my IRA because of that defined risk aspect. Plus, there wasn't a ton of volume going on in CMI, which was a little bit disheartening. So the markets were a little bit wider than I am normally liking. But went in there and decided to do it anyway. Went into the May, sold the 172.5 calls in there for 55 cents. Bought them back this morning for a nickel. Gave up a bit of an edge. I actually probably could have bought the 170 calls for a nickel and put that spread on for zero for the most part. Thought about doing that and then just said, you know what, let's walk away from it. Save my margin for another trade because we got a couple of them coming out later on today that I'll talk about here. So that was a nice little winner. We also have today Yum. Now, McDonald's did really well on their earnings. They popped up, which is what gave Yum a little bit of a boost today. McDonald's is coming off, and we're starting to see Yum come off as well. I still think I'm going to try and play this to the upside for a nice earnings trade and take advantage of some of that high implied volatility. But, you know, if the market really starts getting ugly, I might just change my mind and do it all as a sell on these, because MasterCard I'd like to play to the upside. Visa did very well on their earnings, pushed them to the upside. I think that MasterCard will do very well because remember, all of this goes back together. We're seeing spending increase, we're seeing prices go up, we're seeing household income remain relatively steady, if not coming off. What does that mean? Well, when you're not making as much money, but you're spending, usually that means you're doing it on credit. So if we're doing it on credit, that should help out MasterCard. So I'm going to play MasterCard to the upside today. And then Apple, I really want to play, but I don't know which direction I'm going to go with on Apple. A lot of stuff out there, and they usually have a tendency to gap to the upside. So I'm probably going to play Apple to the upside. So probably Apple, MasterCard to the upside. And if I do anything else, Devon Energy or any of those Yum brands, I'm probably playing everything to the upside depending on how the market really starts reacting in the afternoon. But I think that these stocks are actually going to come out with better than expected earnings. Might all rely on their forward guidance, but we'll have to see. It could be a game time decision, all right? But check it out on Twitter at Wolfman's blog. I'm tweeting these trades out when I get them done. Also, go to protraderstrategies.com and sign up for Friday's webinar, all right? Give me a thumbs up, a thumbs down, like, dislike on this video. If you give me a dislike, let me know what I'm doing wrong so I can kind of correct those things, kind of tailor this to you, and so you're getting as much out of it as possible, all right? So if you can't take that, take it easy.